Your interviewer asks, "What moved NAV?" Most candidates freeze. Explaining the movement is where real fund accounting begins. Assume opening NAV is $100 million. Closing NAV is 115.5 million. The increase is not automatically performance. Start with the master rule. If an entry hits P&L, performance NAV can move. Income increases NAV. Expenses reduce NAV. Realized and unrealized gains or losses move NAV. Capital activity is different. Capital activity changes investor capital. It does not create investment performance by itself. The same applies to an asset reshuffle. If cash buys an investment, cash falls and investment rises. One asset replaces another. No gain exists yet. Now build the NAV bridge. Opening NAV is 100 million. Market movement adds 8 million through price changes, foreign exchange, or unrealized valuation gains. Income adds 4 million through interest, dividends, coupons, or PIK income. Fees and expenses reduce NAV by 1.5 million. So, performance NAV becomes 110.5 million. Then, net capital activity adds 5 million. Closing NAV is 115.5 million. That is the story a reviewer wants. Now, here is where the books expose the truth. For income accrual, debit income receivable and credit investment income. P&L rises, so NAV rises before cash arrives. For a management fee, debit management fee expense and credit fee payable. The expense hits P&L, so NAV falls at accrual. For an unrealized gain, debit investment and credit unrealized gain. For an unrealized loss, debit unrealized loss and credit investment. No cash may move, but NAV moves because fair value and P&L changed. On an exit, do not confuse sale proceeds with realized gain. Realized gain or loss is the difference between sale proceeds and carrying value. That result hits P&L and moves NAV. A capital call is different. Debit capital call receivable and credit LP capital. On settlement, debit cash and credit capital call receivable. It does not create performance P&L. A distribution is also a capital movement. It may represent return of capital, income, or realized proceeds. It is not automatically an expense. One transaction can touch several books. P&L explains performance. The balance sheet records assets and liabilities. Capital accounts track ownership. Reporting converts them into NAV and LP statements. Now test the rule on real transactions. Subscriptions and redemptions change total NAV and ownership, but not performance NAV. A portfolio purchase is usually an asset swap. Debit investment, credit cash. No immediate performance impact. A sale creates realized gain or loss. That moves NAV. Accrued income can increase NAV before settlement. Foreign exchange can move NAV even when nothing is sold. PIK income can increase NAV without cash because the return accrues to the investment balance. Derivatives move NAV through mark to market. Futures, options, swaps, and foreign exchange forwards are revalued through P&L. Margin is a cash or collateral movement. Mark to market is the NAV driver. Corporate actions also need classification. A bonus issue or stock split usually changes units or NAV per unit, not total value. A dividend can create income or receivable treatment. A merger may create a fair value impact. Then come the silent NAV movers. True-ups, as-of adjustments, late trades, valuation corrections, foreign exchange restatements. These may arrive later and still change NAV. So how should you answer in an interview or NAV review? Use one structure. Start with opening NAV. Explain performance drivers. Separate capital activity. Reconcile to closing NAV. Then support the movement with journal entries. Ask 3 questions. Did it hit P&L? Was it capital or performance? Which book changed? Those questions solve most NAV impact problems. Here is the interview answer. The fund opened with NAV of $100 million. Market movement and income increased performance. Fees reduced it. Performance NAV became 110.5 million. Net capital activity added 5 million. Closing NAV was 115.5 million. I would support each movement with the relevant journal entry and reconciliation. That is the NAV impact framework. Do not just calculate NAV, explain what moved it. Connect the journal entry to P&L, capital, the balance sheet, and investor reporting. That is how you sound stronger in fund accounting interviews. That is how you earn trust during NAV close. And that is how you explain private equity NAV, NAV bridges, journal entries, capital activity, gains, foreign exchange, mark to market, and LP reporting with confidence. Subscribe to the Fund Desk if you want to explain fund accounting, not just memorize it.